The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Thank you very much for being with us today. How's the volume? If you just someone type in the question box if you can hear me all right. Let's see what we've got here. Yes, Mark. Thank you, Mark. Volume's good, says Mark, so that's good. All right, loud enough for everyone. Mike as well. Hear me all right? Okay. Well, here we are, folks. Less than three weeks to Christmas. I must have been the only person in the world who didn't know that, because I'm sure we've been getting bombarded with endless reminders about that. But I've managed to avoid all of that so far, which is grand, and really had just too much to focus on with the markets, which have just been fantastic, haven't they? All right, so welcome, and let's see where else we are. We're good morning in my part of Australia, good afternoon in the south. Good to have you here. So we've got all our usuals here, good to have them. Abby's a new person. Abby, don't know whether you're a male or female, but if you're a girl, a special welcome to you. Abby, we don't have many ladies with us, so we always want to make sure we recognise them when we do. Albert, he's a tutorial guy. Bill, Brian up there on near Weewar, he's an agronomist up in the cotton country. Good to have you with us, Brian. And let's see what else we've got here. Yep. Chase, of course, Chase, my smoking nemesis. This will be a smoke-free webinar today again, Chase, thank you. Working on it's not easy. Good to have Daniel with us. Danny's with us. Let's go on here. Let's see what's happening. Webby, the king of the black lines. Boy, haven't they been fantastic this week. Just marvellous. Dean, he's a tutorial guy. Good to have you with us. Ewell, he's a tutorial guy we don't see very often. Good to have you with us, my friend. Terrific. Harold, the king of the gold bugs up in Redding, California. Hope you're getting some relief from those dreadful fires you had near you there, Harold. Terrible. Jeff, the tutorial guy, good to have you. Jen, Jen, if you're a lady, a special welcome to you. Jeremy, over in Swanage in UK. He's having great fun with his the Success program. I'll tell you a story about him a bit later on in the session. We've got John, he's a tutorial guy down in Coffs Harbour. Good to have you with us, John. Justin, down in Hunter Valley, and your son, I hope, is there as well. Mark, another Mark. Mark Gell, going to be a big trader. Marv, good to have you with us. Tells me it's raining in California. Mike, the big O, good to have you with us, my friend. Mike, he's going to be doing another tutorial soon, very soon. Lord, look at all these good friends we've got here, everyone. Peter, good to have you. Scott, Sean, tutorial guy. He's should be about time for us to have another chat, Sean. It's been a little while. Good to have you with us. Tom, your friendly wealth fund manager down in Florida, beautiful Florida. Trevor, he's a long-time member with us. So good. Good to have everyone here. Cathal, living in Sydney, first time here. Recommended by Boyd in Canada. Oh, yeah, Boyd, he's a character. I hope Boyd's all right. He usually sends me jokes. He's a very funny man. But I haven't heard from him for some months now, so I trust all is well with Boyd. Terrific to have you with us anyway, Cathal. And the lovely Janet has arrived. Janet, I hope your leg's great and you're doing tap dancing now. Well, Janet lives in, like a lot of you, lives in that cold country. She lives in Canada. And I've never quite understood why people live in those extremes of climate. But anyway, keep a long story short, Janet slipped on some ice. Well, I guess that's last winter now, Janet. And she had a really nasty break in her ankle. So I hope you're over it. And leg is great, she says, but she's not tap dancing. Folks, I'm so glad you're with us today. I mean, I think this is a really interesting webinar, really interesting to me. Let's move on a little bit. What stirred my funny bone, let's make sure you've seen the page change. Yes, you have. What's stirred my funny bone this week is I've had a number of clients who've got 401k or holdings in stock saying, is the high in yet? And it moved me to go and have a look at some of the emotion, some of the temperature of these poor folks who trade stocks. Now, let me start off by saying I don't trade stocks. I used to trade them when my father was alive. He was a great man for stocks. That's decades ago now. And if you ask me about stocks, my answer now is no. I don't trade stocks because they're far too risky for me. I think stocks are incredibly dangerous. And judging by what's happening in the hedge fund world and investors world, I think I'm probably right. Anyway, just to remind you that some of these numbers we're showing you today come from the Daniel Code, and it's just pure science. These numbers, you'll see them everywhere, and they form the basis of the Daniel Code. Okay, let's see if I can find my little button here. Here it is. So let's move on. So in Bloomberg yesterday and the day before, the headlines were "Nothing is working. Nothing's working." Not large or small cap stocks in the US, not international, not treasuries, bonds, commodities, or real estate. Most of them are down, and the ones that are up are doing so by percentages, excuse me, in the low single digits. So it's a real tale of woe is me in that world, which most people say, oh, well, that's the finance world, that's the market. Well, no, it's not. It's part of the market. So these are the people who are got very, very small, tight blinkers on, and what they're looking at is stocks. Pretty much stocks is the basis of it, and bonds. And they're saying nothing's working, can't make any money, it's hopeless. And next screen, I've headed it, the misery of investments. And boy, that internet's slow today. So this is all from Bloomberg, and I pick a lot of this stuff up from Zero Hedge. If you don't already read Zero Hedge website, you should. It's pretty irreverent, but they have some really, really interesting stuff, quite amusing. So look at the first paragraph here. What is shocking is the lack of gains. And if going by the breadth of assets failing to deliver upside, 2018 is starting to look historic. Crikey. So the inability of any single asset class to escape the dismal black hole supergravity of devastating losses in a brutal post by the FD, as BTFD is by the FDIP catharsis that's mutated an equal opportunity route. I mean, I must be living in a different world. It has been a fantastic year of trading for us. December's enormous. The last few months have been fantastic. We had a super burst of volatility in equities in January and February, another one recently. And this is a different world. I'm reading this stuff and thinking, God, I hope none of our clients read this stuff, because it's it's sad, because they've got it's not only sad. I think it's a giant con. They have such a total the finance industry as such has such a total investment in stocks that really what they're saying is we don't know what we're doing, and we rely on the market going up to make any money. And if you think about it, that's how all brokers in the stocks business promote. They say, oh, the market always goes up. Here's a long-term chart about it. Just buy and hold, buy and hold. Buy and hold, to me, is code for I don't know what I'm doing and I don't know how to trade. So it's the most simple autopilot you can have, buy and hold. And that's great when markets are going up. Peter's got Peter Kay, he's a short-term trader up on the Darling Downs. Pete, good to have you with us. He said, yeah, that's what you get when you do what everyone else does. Well, this community of stock traders is many, many multiples the size of futures traders, but this is their view, and it's like scratching your head and saying, are we living in the same world? And the final paragraph here really tells you such a uniform underperformance by all assets is unique in history, because when something falls, something else gains. Amid the financial catastrophe of 2008, what catastrophe? I thought it was sensational. Treasuries rallied. In 1974, commodities were a bright spot. 2002 was REITs, the real estate trust. Yet in 2018, there's nowhere to run. Now, that's in Bloomberg, pretty much the Bible of that industry, and it's straight out rubbish. There's been a ton of money made in all markets. They do include commodities there, and commodities in 2018 have been great. We've had this tremendous up-down movement, which is what I call volatility, and what it's the lifeblood of futures traders. Bloomberg then go on to show you that they're very worried about analysts. And of course, analysts are major clients of buying research from Bloomberg and brokerage funds and elsewhere. And what they're making is the point that same thing, there was a bull market somewhere, not this time, and here's what despondent traders can blame. What they're saying is they can only trade a bull market. Well, that's not right. You can short stocks. There are procedures you have to go through. You can short anything. So, this article from a very, very authoritative source, Bloomberg, the biggies, really is just imprinting this line that we can only make money if markets go up. And think about that. If that's what the vast majority of the investment and stocks community thinks, I mean, it's sad. And these are the people who handle your money. Maybe not your money. I think you're too well educated for that. But it's extraordinary. I don't know if it's just me, but it's literally like I at least am living in a different world. And this staggered me. Hedge funds, according to Bloomberg, are very sad. There have been 400 hedge funds closed in the last couple of years. There have been no net launches. This chart only goes up to 2017 financial year. No new launches of hedge funds. Management fees are going down. Incentive fees are well down. That's the 2 and 20. So apparently there's a lot of discounting going on by the hedge funds, and that's very sad for them. And Tom would know all about that because he's a wealth fund manager. They advise clients which funds to put their money into. And Bloomberg's particularly concerned about analysts, who they call here in this article a vanishing breed, and saying that there's a lot of downsizing of analysts. Of course, these are the guys that Bloomberg relies on. They sell them data, they sell them charting packages, they sell them advice, they sell them insights into connected people in the industry, the lifeblood, in other words, gossip, that keeps the analysts up and about and excited. I love this first paragraph. Usually the excuse nothing is working is used by financial professionals when begging clients not to pull their money, desperate to explain woeful performance, and when there are no other explanations left, that's what they say, nothing is working. They then go on to say, only in 2018, that excuse is actually spot on. I don't want to take issue with that. I think that's just not true at all. The next paragraph, they talk about when stocks waterfalled on Wednesday of this week due to coordinated CTA liquidations. I'm going to show you that. It's just totally absurd. Market statisticians continue to fall over each other to describe the pain being felt across asset classes. And while it's customary to use the phrase since Lehman, of course, they were the big firm that blew up in the 2018-19 crash. They've now elevated that synonym to say things haven't been this bad since Richard Nixon's presidency. I mean, it's incredible, absolutely incredible. You can read the rest of it yourself, but basically they're saying similar analysis, which they flagged 2 weeks ago, showed year-to-date returns of the best-performing asset between US and global equities, corporate bonds, treasuries, gold, and real cash. I mean, how can real cash be an investment? I don't know what happens in your part of the world, but I can tell you, in fact, I do know what happens in your part of the world because I've got accounts over there. But real cash, go and ask the bank to give you a turn on cash. I mean, it's barely worth making the phone call for the rate they pay, and it's certainly not worth your while to get in your car and drive over there to ask ridiculous stuff. This is the most authoritative group, one of them in the industry. Everybody's miserable. Hedge fund analysts suddenly find themselves in an existential crisis. I mean, goodness, this is really gilding the lily. But in fact, this is a very real consideration, apparently, in the sort of formal part of the market that's made up of investment funds and hedge funds and advisors and CTAs. It finishes up with a summary that the industry is starting to contract, and analysts, those middlemen who make the 2 and 20 model possible, that's the hedge fund model, 2% of the balance of your account as a fee and 20% as a success fee, 20% of profits, have no idea how to respond. Well, the problem is not so much that they have no idea how to respond, but they obviously, on these figures, they have no idea how to make money. To say that hedge funds have made no alpha or beta in the last 4 years is the most extraordinary statement. This market, until we started getting volatility in January of this year, has been absolutely designed, modeled, fashioned, and trimmed for the buy and hold strategy. In fact, it's been the only real worthwhile strategy when there's total lack of volatility and you have a unidirectional market, as we've had until the start of this year, for years and years in the major equity markets. They then move on to CTAs. This is also from Zero Hedge. They're now going to start talking about CTAs, which they call the much faster type. I mean, it's crazy. Namely, the much faster CTAs, or managed future funds, which do nothing but chase market momentum once it's been established. Well, if you think that statement's coming from them with a bit of a sneer, you're right, it is. And they're talking as their article based on here is Nomura's CTA trend model, which you can subscribe and buy from Nomura for a whole lot more than anything we charge. But it's absolutely, when you see it in operation, it's absolutely childish, totally childish. And they've got a chap in here who's giving them this article that Bloomberg's writing, and they're talking about this Nomura, the CTA, certified trading advisors, people who trade your funds, one particular group of them. With this statement, it was triggered to sell down at 2760. They're talking about the S&Ps at the 200-day moving average, which would have 32.8 billion notional for sale. Once they're talking about what happened at a nice big bar on Wednesday, once it says one, it means once the selling program hit, it was lights out. And the number of stocks that were sold off all at once, as measured by the New York Stock Exchange uptick, downtick index, reached a negative so-and-so one. I mean, I don't even look at that stuff. I know what it is. It has no relevance to me at all. All it's doing is measuring what's already happened. It certainly has zero predictive value. And then go on to say, this was written after Wednesday night's market close, if the S&P drops another 20 or so points, and they give the next sell point to 27.11, there's another 32 billion notional for sale, and their max short levels now at 2574. It's going to unleash some massive other selling. Well, there's the 60 billion odd has gone off at the 200 moving day average. Was it a big deal? Look, not really. It's just the market trading. And here's the, when you see this next screen, sounds like they're on the wrong side of the trade. You'll be absolutely surprised to hear this, Peter, because I'll tell you when we get a bit further down. This is the S&P. This is the big S&P, and this is the index. And you can see that number 2763. That was where the 200-day moving average was on Wednesday. And this whole lengthy article is explaining why that down bar happened. As it breached the 200-day moving average, it unleashed these masses of selling. Well, what happened on the previous occasions when it breached the 200-day moving average? Not that much. They're all, they're big bars. We're in a period of volatility, but it's hardly end of the world stuff. And you'll see today's bar on this chart was done a couple of hours before the market closed, and it actually closed higher than that. And not coincidentally, 2763 happens to be almost exactly the true low of Monday's bar. You can see under Monday's bar, which is this little turkey here, this little fellow right at the top. The high of that bar was 2814, excuse me, and there was the Daniel code red line there on members charts at 281550, just 1.5 points away. It was also a very, very nice hit on the Daniel code black line, which set up the DC hook trade, for those of you who know what that is. And the next day, of course, for the big bar down, that was Monday, I'm sorry, that was Monday. For Tuesday, of course, we had a TO3 sell signal and a 6S sell. In fact, this is the bar, this Tuesday's bar, this big bar down, that's caused so much excitement with this correspondent of Bloomberg's telling him that this all happened because the Nomura CTA advice document had this at such a crucial level, and all of this selling was going to be unleashed. Well, today there's another blow-up, with the rest of Wall Street turning to attack the guy from Nomura, saying he's got the levels wrong, he hasn't described the process properly, blah, blah, blah. And he's come out saying, well, Wall Street is perplexed by how he could get it so right and all the other experts did not, and is accusing the Nomura quant of a lucky one-time fluke. Nothing could be sillier than that statement. It's not that it was anything particularly clever by anyone at Nomura. It was obvious. It was a TO3 sell, it was a 6S sell, it was a time sell. In fact, if you didn't get that trade on Tuesday, then you really got a real problem. And this is implying that the majority of Wall Street missed it. Wall Street is perplexed by how he, the Nomura guy, could get it so right, and all the other experts did not. And if you think about a majority of Wall Street not being able to be aware of what was likely, very likely to happen on Tuesday, it's staggering. It's staggering. Because it was as obvious as, I don't know what, you can use a vulgar expression or not as you like. But this is how 6S has called it. In fact, this is how 6S has called every turn in the last 2 months, which I've shown you on this chart. And I think there are 11 signals there, primary signals, and there's one failure. And Monday's bar, that's the high bar, that set up the sell. In fact, Friday, there were sell signals as well, which were not elected. But Monday certainly set up the sell at the true low. You can see a little bit of a dash under Monday's bar. That's this bar here. You can see there's a little bit of a green tail underneath it. And that's a device that Trade Navigator uses just to show you there's a gap there. And you don't ever want to be buying or selling into a gap. You must use the true highs and true lows of bars, not the chart high or the chart low. But there you are. The market went through the 200-day moving average. Yeah, it was a great bar down. It was a marvelous bar down. And then we had a small nothing bar the next day, which was, of course, it's actually an inside bar. That was Wednesday, where the market only traded until 10 a.m. because that was the memorial holiday for George H.W. Bush. And look what happened today. Down it went, hit its Daniel code number, the low of which was the blue line. Those of you who look at members' charts, 2623.75. There was also a black line there, Webby, as you know, at 2626.75. The last level of support or resistance for any swing. This big bar today went about 1.5 ticks through it, turned around and said, whoops, didn't like that, going back up again. And if you were really, really lucky with all these things, you closed out your trade on Tuesday, sat out Wednesday. I didn't put in any new success signal for today because the risk on the with trend indicator, which would have been a sell, was just far too big. Okay, let's move on. This is the members chart I just told you about. It's on the website. Members can see it. And there was the blue line at 2623.75. This market roaring down, full of momentum, full of bad managers and energy. Just took out the old low, the old swing low back on July the 23rd. That low was at 2626. And this low today, 2621.25. Just enough to, I think I've skipped one here for you. Here we are, I'm sorry. Just enough to take out the stops. Now, that's a false break. Those of you who've been with us long enough know that fast moves come from false breaks. And I'll show you another chart in a moment that illustrates that a little more clearly. But on the question of is this any of this, is this a likely Christmas rally or a head fake? At this stage, I'm going with a head fake. I think this market will rally. I think it'll probably start to rally tonight. If it doesn't, it might be telling us something. But I think there's a high probability this market rallies. And I don't see anything on any of these charts because our real trend indicators come from longer term charts, which I've showed you before and I'll show you again today. We're not getting those signals that tell us that there's anything happening other than a very, very overdue correction. So guys who trade stocks like to say there's no future in futures. I've noticed over many years, and have the benefit of living for a long time. Seems like a long time at times, long days, short nights. That people who say things like no future in futures are really flat earth people. It's code for saying, I don't know how to do this, so it can't be done. I remember many years ago many years ago when I was going through a stage of life where I was trying to learn how to trade futures. And being an attorney, I thought that you could learn anything from books and lectures and some practical experience. That's how you learn the law. And I figured nothing could be much harder than becoming a competent lawyer, getting yourself through 5 years or more of university as it was then, and another couple of years of being an article clerk. So that's how I was trying to learn how to trade futures. And in that process, I spent a lot of money buying programs and books on trading, and I spent even more money going to the seminars of all the most of the big names in the trading business. And I don't ever want to speak critically of anyone, other than to say that none of them worked well enough to give you a sustainable equity curve, which is why I had to then go away and spend many years until I found and developed the Daniel Code. But in one of those processes, one of these illuminaries, who he's a great reputation, done wonderful things publicly, and also happens to be a very, very nice bloke. I know him personally. I like him. And he's a big drinker too. He gets still on the Chardonnay. He needs to update that a bit. He said he was talking about trading time. And he said the people who talk about trading time are fools. Because if you go to your bank and tell them that you've made 2 hours trading time, they'll simply look at you and say, so what? But if you go and tell them you've made 200 points trading price, they'll be happy to lend you some money. And because this guy was a guru, and because I was paying him $10,000, this is 20 years ago, might be 25 years ago, it was a lot of money then, I can tell you. $10,000 for a 2-day seminar at Bull Run down near San Francisco, La Jolla, I think. I took that to heart, and that put me off the idea of trading time for many, many years. And it was actually 15 years after that before I really decided I would follow these ideas I had about trading time, which I've shown you in the first slide today, that they're all fractals, all time cycles are fractals of the basic Daniel Code ratios that control both price and time in all markets. But have a look at this chart here. This is just since October the 3rd. There's been some part of $32,000 available on one S&P E-mini contract. Now, if you assume that we could get 50% of that, and we actually get a lot more than 50, but just assume 50%. That's $17,000 in 2 months on a margin of about 6,500 now, or 250, 260% on margin in 2 months. This is the market that the analysts and brokers and Bloomberg are saying nothing's working. I mean, this is a trader's wet dream in my view. It's just been fantastic, the trading. Superior. Once you get this sort of volatility, if you know how to trade, boy, that's your big payoff. So, I mean, it's extraordinary that these related worlds, we all view ourselves as traders in one form or another, but we're not. They're different species. When I was back in the day, I used to be a very, very keen yachtsman, and I used to do the Sydney Hobart race, one of the 3 big offshore races, the Fastnet, the Sydney Hobart, and the Middle Sea race, and the Med, the 3 biggies. Of course, there's more from America as well, but they're slightly different format. The first time I went down to the Sydney Hobart race, one of the guys said, you'll be able to recognise the Tasmanians. They've got 2 heads. And of course, they don't have 2 heads. They're beautiful, lovely people, very hospitable. Boy, you pull into Constitution Dock at Hobart after getting your tail bashed for 2 or 3 or even 7 or 8 days, depending on how big your boat is. And they are the most hospitable people in the world. But it's a bit like this comment I had from this guru that was saying, you can't make money trading time. My observation is that people who say that, what they're really saying is, I don't know how to do it, so it can't be done. And you'll come across that in all sorts of things in life. So don't be discouraged. If you believe in something, follow it. Follow your dream. Follow your inner voice. I've known for years and years that trading time and time cycles in markets are absolutely the best way to trade, which we're seeing with this 6S now and other time-based programs. But I was put off it. For 15 years, I was put off were following that research that I was interested in because of a statement by somebody who obviously didn't trade time, didn't know how to do it. So don't take those sort of comments to heart. You just follow your thing. Okay, this is the S&P. This is the E-mini. That dotted line across it, that's the open of the market at the January 2018. So, their statement that it hasn't gone anywhere on a closed basis is statistically not far from the truth. But, oh my goodness, I've already shown you just the last few months how much money there's been to be made in trading full futures in these massive, massive swings. Just stand by 1 second, folks, please. Apologies about that. I hope I didn't break your concentration. Nothing earth-shattering. One of my dogs wanted to be let in, so it's best to let them in when they want to come in. Otherwise, they're likely to start barking, which is annoying. So this is the daily chart of the S&P recently. For all 2018, you can see it's had this super volatility in late January, early February. That's continued for a few months. We've then had this relentless climb up the Daniel Code trading channel, and now we've had a break below it, immediate first rally back in late October, early November to test the underside of that line. That's quite normal, just confirming the downtrend. And these ranges that we're getting now, just fantastic. If you're not excited about trading futures now, you never will be. Anyway, here's our big picture for those. I showed you this 2 weeks ago. Those of you who are worried about is a top in or not, well, I had the two lines on this chart. I said we'd need to see a close. This is on the S&P. This is the index, incidentally. I said we'd need to see a close below 2628 before I would err to the side of thinking it was all over, and a close below 2532 would confirm it. Now, there's nothing terribly magical about those numbers. If you have a look, this is a 12-day chart. It has 12 daily bars in each one of these bars. If you have a look at a 6 or a 12-day chart around the 2000 top and the 2007 top, you'll see the same sort of thing. You get this sort of topping action, consolidations, but it's not until a major swing is taken out on a closing basis that you start to get the accelerated move down. And I don't really see how that happens. In my view, despite all these big range days we've been having, there hasn't been enough real emotion to the downside moves. I mean, 3% down on Wednesday. If this was really a bear market, we should have had some follow through, and we should have had that follow through today. And as you can see, this market went down, hit the Daniel Code blue line at 2623, reversed, rallied all the way up to the previous day's low. That's not the sort of sentiment you see in a bear market. So there's no need to worry about sentiment, and you don't even have to have a view whether the high is in or not, because you can just trade the Daniel Code numbers and signals, and you'll be in all of these big moves. And have a look at this chart now. I think it's changed for you. This is the S&P E-mini. Look how perfectly these markets are turning in a technical sense based on Daniel Code indicators. The low we had, I'll just get these numbers for you. The low we had back in October 2000, October 29th, I should say, it went down to that Daniel Code blue line and just broke it, the one at 2606. That's off a weekly chart, that number, incidentally. If you look at the members charts, the daily chart, there was a blue line at 2601 and a quarter, and that low was 2603, 1 3/4 points away. Just perfect, and that gives you what we call a false break. And a false break is where the market just breaks one of these numbers that's significant, and then reverses pretty quickly, and off it went. And that's what gave us the big rally up into November the 8th. As you can see, that rally topped out at 2818 exactly. And 2818 happens to be one of the Daniel Code retracements. And it's what it's the alternate. It's not the usual retracement. It's the alternate to our usual retracement around that area. And 62.5, it hit that exactly to the tick. And if you go back to the previous high on October the 17th, that close on that bar, 2816.25, against a black line at 2815, and this red line at 2818. This market, Daniel Code target recognition, for those of you who are new to us, is valid on a bar high-low or on the close. So the close, Wednesday, October the 17th, 2816.25, excuse me, against that red line, 2818, is, and then on the daily chart it was 281550, is absolutely perfect target recognition. In addition to that, the first of these lows that we're concerned with that came in October happened right at a fourth seal line. And the fourth and fifth seal lines are really forecasting methods, but what they are, their peculiar characteristic is they have elements of time and of price. In other words, any angle that's on any chart will have a measurable price level and a measurable time date. And the fourth and fifth seals are variances of that, that forecast future turns. And the October low, which gave us the false break of the blue line, on this chart at least, was perfect at a fifth seal line. And the next low, which we've just had today, was almost exactly at a fourth seal line. We had the black line there, Daniel Code black line at 262650. It's 2675 on the members charts, and below that the blue line 262375. It's not on this chart. It's on the daily chart. These numbers came off a weekly chart. You look at the members chart, which I think I'm probably going to show you in a minute. 262375 is the black line, is the blue line, I'm sorry. Broke that by 1 and a bit points. That was it. And this was a huge momentum move. I mean, the Dow was down 500 before the market opened, the futures, and all these markets were gap down markets. It doesn't show on the futures because these are 24-hour markets pretty much. But boy, there was some excitement in the trading world last night with this gap down opening on the physical, and nothing to it. Roared down, hit the Daniel Code number, then it hit the fourth seal line. That was it. It's all over. Rallied back up, and doesn't look too dramatic to me. Let's move on. So when I say perfectly, really perfectly, well, have a look at the close only chart. Have a look at that 62.5% retracement, which is the Daniel Code number that's an alternate to the normal number that should have usually catch it in that ratio, which is 59.3. The next number after 59.3, if the market slips through that, is 62.5. That's a Daniel Code ratio. Why is this market going to those numbers? Because it's how can I put this politely? It's the NFI default of traders that don't know what they're doing. They use Fibonacci numbers. And Fibonacci numbers are approximations. Daniel Code numbers are exact. So you can see that you look at these closing highs here, you can see they're exactly on that 2618 line. Well, how exactly? Well, Wednesday, November the 7th, that high came at 2817.75 against 2818.18. In other words, one tick. The next one, here we are, the most recent little high we had there, 2814. Look at the close only. Perfect. Look where it went to. Look what that what it did to that 262650 black line. Hit it exactly. So even though the media presents what's happening in futures markets as exciting, emotional, waterfalls, tumbling from the 200 DMA, all of that stuff is rubbish. These markets are moving perfectly to their Daniel Code ratios and numbers all the time. I mean, our website, Daniel Code website, folks, is 10 years old in December. I forget the exact date, but it might be 10 years and 1 month. We've been doing this for a long time, and I was doing this for 10 years before I had a website. So you can go back at the Daniel Code website, click on Chart Archives, and you can see 37,000 charts that I've created over the years and posted on the website. You'll find it very, very difficult to find one that's turned anywhere except at one of these Daniel Code numbers. And when it has, that's because it's shifted to a different time frame. Predominantly, I use daily bars to create these DC numbers, but periodically the market can slip into a 250-minute time frame or a 112-minute time frame, but very, very rarely indeed. So, this is all quite normal what's happening. This is expected. It's hitting its Daniel Code targets perfectly. All of this is great. There's no drama. There's expanded volatility, which is wonderful. It's God's gift to traders. This is the T-bond chart, and I wanted just to show you how silly this issue is that there's no alpha or beta available. This is just US T-bonds this year. And I haven't marked all the swings, but you can do a quick calculation there and say 8, 12, 16 and a half, 17, 19, 26 and a bit, 27, 32,000 just on those swings alone. Assume you only get 50% of that. Okay, assume you only get 30% of that. It's a huge amount of money as a percentage of your margin. So, I mean, this statement that there's been no movement in markets, totally wrong. Markets have been fantastic this year, absolutely wonderful. Some of the best trading we've ever had. This is, again, still S&P E-mini. I just wanted to highlight these two lows to you because fast moves come from false breaks. And we had this false break back in October the 29th, and we've got it again now. So if we get a bit of upside to this move, we should be able to expect a fast move out of this low. Again, here's crude oil. They were talking about, they included specifically commodities in Bloomberg's authoritative statement that there's been no money in any market. Have a look at this. Just this last big swing down in crude oil, 23,000 or some part of that. Wow. I mean, I know what success has done to this market. It's absolutely killed it. It's been fantastic. All right, let's move on. So this is their wrap on it, I think. Usually the excuse nothing is working, I've read this to you before. When there are no other explanations, that's what they say. Nothing is working. An abysmal day for stocks. Well, it might have been abysmal for stocks. It was fantastic for futures traders. He's talking about Wednesday here. And, of course, the wonderful phrase, worse since Lehman. And now escalating that, things haven't been this bad since Richard Nixon's presidency. I mean, it's rubbish. Don't worry about Bloomberg on analysts. Have a look at Needham on futures. It's been a great trading year. Much more to come in December. Love this volatility, up-down volatility in many markets. That's what we want. We get paid exactly the same if markets go up or go down. It's just that equities go down faster, hence the expression markets go up by the stairs and down by the escalator. And frankly, it doesn't matter to us whether the high is in or not. That's something that only stock investors have to worry about. What we have to worry about is whether we're getting sufficient volatility, this up-down movement. That's what I mean when I'm talking about volatility and size of the bars, that we're getting enough of this up-down movement that the signals, which if you've done a Daniel Code tutorial, are like 99% accurate, but sometimes the market doesn't move far enough away to give you a profit before you get the reverse signal. That's what happens in congested markets. Janet, I've been with you since 2011, and Akshay, congratulations, a decade par excellence. Thank you, my friends. That's great. That's great. Yeah, 2008 I started this website, either late November or early December. Long time, isn't it, to be together? And some of you have been with us all that time, and others, like Janet, have been with the vast majority of that time. This is from Jeff. Jeff C. John just moved from paper trading to the simulator. He's doing a tutorial and caught the Tuesday big bar down on the S&P. By the way, the new guest, Abby, on the webinar is my daughter, who's become very interested of late. Welcome, Abby. Great to have you, and hope you really get excited, get into futures trading. You've come to the right place, and go through the website. Have a look at everything that's there. Have a look at the chart archives. There are 35,000 charts there. Show you how this stuff works. Markets just move from one Daniel Code number to another. So it's great to have you with us, Jeff, and welcome, Abby. Hope we'll see a lot more of you in the future. So don't worry about whether the high's in or not. If you've got a stock portfolio, which I know a lot of you do have, hedge it. You can hedge it with futures. It's simple. And let me tell you, all these hedge funds who say they hedge their positions don't. Or if they do it ineffectively. And you see the nonsense we've been reading to you today from the industry leaders, the industry Bible, Bloomberg, goodness. It's just it's a totally different reality. It's a different world. I mean, I don't know that world. I don't want to know it, but I mean, I'm terrified that these are the leaders of the finance industry and they are so totally and utterly incompetent. Scary stuff. Anyway, look, the emotion around stock markets is extraordinary, as is the emotion around U.S. cultural issues. I mean, it's great fun for us. We don't have to live over there, but you do. But I thank you for the entertainment. I mean, I can't believe all this hate and angst and stuff about Trump, and women seem to be so angry about everything in America. I don't know why. Look, it hasn't infected Australia so much yet, but I must say this is a country that has been getting Americanized at a high rate. We now have, of course, Halloween here, which is absolutely nothing to do with our culture, but it's just been gathered from America. I even see websites advertising sales on Black Friday, a peculiarly American tradition. So, you know, it's sucking us up over here. So no doubt we'll have raging women, or nasty women, as Trump calls them. We'll have some of those appearing in our parliament. There's some there now. A couple of the Labor women are very, I don't know what's the word, scary. Yeah, I think that's the word. Of course, the Chinese say, may you live in interesting times. Indeed, these are the most interesting times. I'm thrilled to be trading in this environment. Given what's happening in this sort of US-China argy-bargy, I think the Chinese are going to deliver a lot more interesting times in 2019. And I'm really looking forward to that. You should welcome volatility. Get down on your knees and kiss it. It doesn't come fast enough. Oh, I saw that Mike telling me they banned the Christmas song, Baby, It's Cold Outside. This is just crazy stuff. I read American papers. I have to. I know what you guys are all thinking. they banned the song from The Little Mermaid. Guy, He Wants to Kiss You, I think it is. It's sung by Sebastian the Crab. I might have got that wrong. It's many years since my children were at the age they watched Ariel, The Little Mermaid, Disney cartoon. Absolutely fantastic. I loved it. And Sebastian the Crab is singing this song about someone or other. He wants to kiss her. Well, they banned it at a university in the States because there's no guarantee of consent that whoever it was wanted to be kissed. I mean, this is a cartoon, folks. This is kid stuff. You just lost on me, I can tell you. Okay. We've had our 6S program running for you for 4 months now, folks. It's been free to anyone who all you had to do was be registered the Daniel Code. I hope you've enjoyed it. I know some people are thrilled with it. I promised to tell you a story about Jeremy, and he's over at in England, in a place called Swanage, down the south of England. And he's just done a Daniel Code tutorial, which he hasn't finished yet. We're still working through it. Chase, my first cigarette in an hour. Better than usual, I guess. I've usually had 6 by now. And Jeremy was telling me he's been following the 6S signals. And I said, how's it going? And he said, well. And he said, in fact, very well. He said his business is a bit seasonal, and going into winter now in UK, his business has slowed down a bit. So he said, but they're paying all their bills from the 6S trading. So congratulations and well done, Jeremy. And there are others. I don't talk to clients much, usually the ones who are doing tutorials, of course, but Prince Daniel, he rang me yesterday to say he's over the moon with what the 6S trading's been giving him. No, he doesn't follow the 6S signals slavishly. He's a very, very competent short-term trader. He doesn't hold positions overnight, but he's happy to get out and get in, and he takes all the trades and he'll get out where he thinks he should. But he said it's just been marvelous for him. And many of you have written to me and said how much you're enjoying it. So next week, sometime or other, we're going to put the 6S behind a paywall and ask you to pay small amounts of money, if you don't mind. I'm going to put 3 of the most popular ones into the TO3 Plus program. So if you're already a subscriber to the TO3 Plus program, you're going to get 3 of the 6S signals included in that package. At this stage, I have been thinking about gold, crude oil, and the S&P. But the S&P margin is way up now, folks. It's up at 6,500. It may be better if instead of putting in the S&P into the TO3 Plus package, I put in the Russell, which has a smaller margin. And you know, if you read if you follow us at the Daniel Code, that all of the US equity markets are so highly correlated that a signal in one market can be taken in any other market. So if we were to put in the Russell and you want to trade the S&P, it's no trouble. Just look at your chart, put in your buy, order 2 ticks above the true high, and your sells 2 ticks below the true low. This is make sure you're using true highs and true lows, not chart highs and chart lows, because true highs and true lows account for the gap. And you can see that the rule here is if the chart high is less than the previous day's close, then the true high is the previous day's close. And vice versa. If the chart low is greater than the previous day's close, then the true low is the previous day's close. That's the rule to find true highs and true lows. Make sure you check our numbers against the chart you are using, because if you're involved in a rollover, you might be on the wrong date, or our program might have used the wrong date. Always check that. Always calculate and use the fail point. For every entry, there's a fail point. And if you hit that fail point, if the market hits that fail point, it means you're wrong, and it should be the other way. If you get an outside bar on the day of a new entry, you must stop and reverse. I know a lot of programs don't do that, and it's hard for you people who go off to work during the day. If you just put your stops in the right place, you'll just get stopped out. but if you can stop and reverse on outside bars, your trading will be considerably better. And all orders, of course, are conditional until they are elected. We publish with these orders a number, and the market has to trade that number. When it does, the stop orders become market orders, and we say that market has been elected. Make sure your stops are GTC or good till cancel, because there's a gap between signal release and the start of trading. At the moment, we're doing the success signals at the same time we do the end of day signals. That's an hour after we get the end of day data, or at least an hour after the time we should get the end of day data. I may be able to change that for success and do that at 5 p.m. US Eastern Time. Now, the market results between markets, of course, they're going to vary. The ones with the best volatility will give you the best result, and we will make changes of these three markets. We're going to put into the TO3 Plus package for you at no extra cost. This is a reward to show our appreciation to these subscribers because they're the real backbone of the Daniel Code. And I'll change those. If one of them gets dormant and it's not giving us the sort of volatility we need, we'll just close out a position and substitute another market. So additional success signals will be available for other markets, almost everything at the Daniel Code, a few others as well. If you've got any particularly interesting markets that you think you'd like to see included as part of the success signals, send me an email, jneedham@thedanielcode.com, jneedham@thedanielcode.com. I learned that from Bill O'Reilly, say it twice, and it's under contacts anyway on the website. And there's actually on the success page right now, there's a video, a short video on how to trade the success signals. And optimally, you will be trading a number of markets. So if you want to be a super trader, folks, join the elite. Email me with your phone number, country of origin. We can talk about you doing a Daniel Code tutorial, which will get you to the elite level of trading. Guaranteed. Good on you, Mike. Need to talk to you soon, mate. Thank you. And if you do a Daniel Code tutorial, you will be one of the elite traders in the world. We're still running the tutorials. There's 3 weeks in December, and for those of you who are planning on doing a Daniel Code tutorial, don't wait till the new year. Grab one now. We have 2 places left in December. One of the gentlemen who wanted is cancelled. He's put himself off to January, so we still have 2 places available. Shoot me an email straight away if you'd like to do the Daniel Code tutorial, and I'll be happy to call you, and let's have a chat about it, because we can get you started, well and truly started before Christmas. You can start off the new year as a gun trader, and everyone who's ever done a Daniel Code tutorial says it's simply the best decision they ever made. Free trials, if you haven't already had a free trial of the website, you're welcome to it. Just register, and Terry will switch you on for 31 days. And if you haven't used Trade Navigator software and would like to, we can organize a free trial for 31 days of that also. Here's our compliance statement, folks. It's a bit blurry because it's switched from a new version of Microsoft Office. It's a bloody virus, Microsoft, isn't it? I mean, why 2 versions of Microsoft Office would involve one in being out of focus, I don't know. Anyway, do take compliance seriously. Trading is very risky. If you don't know how to trade, it's extremely risky. You can lose all of your money and more very quickly. I do urge you, learn how to trade, preferably the Daniel Code way, because I don't know any other way that's as good or even close or even comparable. Do that, and you'll be a safe and highly, highly competent trader. So that's all for today, folks. Thank you for being with us. We have the next one will be, if there's anything interesting on the chart to show you. Oh, you've seen this chart. This is the S&P and the success signals. Marvelous. We've got a buy for tomorrow if this market rallies. Thanks for being with us. The next webinar will be in a couple of weeks' time. It'll be our Christmas special. It'll be a monster. So make sure you're with us for that. All the best, and enjoy your time. Any questions, please just shoot me an email, jneedham@thedanielcode.com, and I thank you for your company. Bye-bye.